Hello everyone, in this video I am going to explain how to develop a Pine script strategy using TradingView, and we will also use ChatGPT to generate the Pine script code. So first, let us write down the prompt in ChatGPT. The prompt is, I want to develop an algorithmic trading strategy in Pine script using SMA crossover logic, and I need to display buy and sell signals based on this SMA cross logic, which is a simple moving average crossover concept. Now, it has generated a response stating that the logic has been developed based on the given prompt, and it clearly follows the SMA crossover strategy. It has analyzed the requirement and provided the Pine script code accordingly. Let us now understand how this works. We are using a fast SMA of 9 and a slow SMA of 21. When the fast SMA crosses above the slow SMA, it generates a buy signal, and when it crosses below, it generates a sell signal. It has also provided some useful suggestions on how to enhance the strategy further. Here is one important point that we need to consider carefully. Usually, the generated script may produce continuous buy signals or continuous sell signals without any restriction, meaning it does not limit signals to only one per direction. Now, let us improve this by restricting it to allow only one buy or one sell signal in a given direction. We can avoid repeated signals by refining the prompt or by giving a revised or continuous prompt in ChatGPT. Additionally, there should not be consecutive buy or sell signals, and we will also include a configurable trend filter. This means that if the trend is upward, we will allow only buy signals, and if the trend is downward, we will allow only sell signals. Furthermore, we will request the addition of a configurable stop loss and take profit feature. So now, let us check the updated response. It should include conditions such as no consecutive buy or sell signals, a variable trend filter, and configurable stop loss and take profit settings as part of the improved strategy. Now, let us go ahead and enable this strategy in TradingView so that we can actually see how it performs in a live chart environment. To begin with, we need to open TradingView and create a new layout. So, let us create a fresh layout and then add our strategy to that specific layout for proper testing and analysis. For testing purposes, we will use BTC/USD, since it is a popular crypto pair and provides good volatility to evaluate our Pine script strategy effectively. Now, in order to implement the strategy, we need to access the Pine script editor within TradingView. Let me just locate where it is available. Alright, let us check where we can add it. Instead of navigating manually, I will use a shortcut and directly open an existing Pine script editor. From there, I will create a new strategy script. Once the new script is ready, I will copy the Pine script code that we generated earlier using ChatGPT and paste it into the editor. So, this is the exact logic that we received based on our requirements. Let us carefully copy the entire strategy code and paste it into the Pine script editor. Now, we have the complete strategy implemented as per our defined conditions. Next, let us save the script. I will give it a simple name like SMA cross strategy and then save it. After saving, we will add the script to the chart. Once it is added, TradingView will process all the conditions, and based on the SMA crossover logic, it will start generating buy and sell signals automatically on the chart. Now, let us observe carefully how these signals are being plotted and how accurately they are triggered based on the crossover conditions. Along with that, we will also verify the backtesting results to understand how the strategy has performed historically. Before analyzing the results in detail, let us first review and adjust the configuration settings. Currently, it appears that the strategy is using full equity for each trade, so we may need to modify that according to our risk management preferences. Now, let us go ahead and make some changes to the configuration. At the moment, the trend filter is enabled, but the stop loss and take profit features are not yet properly enabled or configured. So, let us enhance this further by adding options to enable or disable the stop loss and take profit dynamically. To achieve this, we will again go back and refine our query. We will clearly mention that the stop loss, SL, and take profit, TP, should be configurable, with options to enable or disable them as required. Based on this updated requirement, let us request an improved version of the strategy. Ideally, all these requirements can be included in a single well-structured prompt. If you clearly define everything you need at the beginning, ChatGPT can generate a more complete strategy in one go. However, in our case, we are following a more practical, chart-oriented approach, where we refine and improve the strategy step by step while observing the outputs. This iterative process helps in better understanding and fine-tuning the logic. Now, I have pasted the updated code into the Pine script editor. Let us add it to the chart and verify whether the enable/disable options for stop loss and take profit are working correctly. As we can see, the options are now available, such as enabling or disabling stop loss, as well as enabling the trend filter. Next, let us configure the values. For example, we can set a stop loss value and define a take profit level based on a risk-reward ratio, such as 1:2. Let us input some sample values and observe how the strategy behaves under these conditions. One important point to remember is that we should not limit ourselves to just one set of results. It is always better to experiment with different configurations and parameters to understand the strategy's robustness. Also, let us reduce the position size to a single quantity for better control and clearer analysis. Now, if you observe closely, the buy and sell signals are no longer continuous or repetitive. They are properly limited based on the logic we introduced, which ensures that the system avoids consecutive signals in the same direction and behaves in a more controlled and realistic manner. Now, at this stage, we have developed a fairly solid strategy, and it is currently running successfully on the chart. You can also observe that it incorporates proper risk management features, which makes it more practical for real-world trading scenarios. Let us now move forward and analyze the backtesting results in detail. If you look at the performance metrics, you can see that the profit factor is around 2.16, which indicates a reasonably good balance between profits and losses. Additionally, the percentage of profitable trades is approximately 42%, and the total number of trades is based on the selected time period, which in this case is from February 23 to April 12. So, this gives us a clear idea of how the strategy has performed during this specific time frame. If you scroll down further in the performance summary, you will be able to see more detailed metrics such as total profit, drawdown, and other important statistics. Now, to make the backtesting results more realistic, let us include additional factors like slippage and commission. For example, I am adding a commission value based on an approximate estimate. For one BTC contract, the commission might be around $22 depending on the exchange, although this can vary. For now, I have set it to $20 as a sample value. Similarly, I am adding slippage of around 5 ticks. This is important because when we place market orders, the execution price may not exactly match the requested price, and there can be slight variations due to market conditions. This difference is what we refer to as slippage. Now, with both commission and slippage included, let us re-evaluate the strategy performance. These factors will impact the net results and give us a more realistic picture of profitability. If you now check the updated results, you can see that the net profit is approximately $20,000. This value reflects the profit and loss after accounting for trading costs, which makes the analysis much more practical and closer to real trading conditions. Now, if you closely observe the updated results, you will notice that the number of profitable trades has actually decreased, and the profit factor has also dropped significantly, coming down to around 0.427. This reduction is mainly due to the inclusion of commission costs, which have a considerable impact on overall performance. If we break down the numbers further, the net profit is now around $20,000, while the gross profit is approximately $69,000. However, there is also a substantial gross loss, which is primarily driven by multiple trades and the cumulative effect of commissions being charged on each transaction. This clearly shows how trading costs can significantly reduce the apparent profitability of a strategy. Another important aspect to consider is market behavior. Even when a trade initially moves in our favor, there are situations where the price may reverse before reaching the expected target. This leads to missed opportunities or reduced gains, and in some cases, even losses. This is one of the inherent disadvantages of such strategies in real market conditions. As a result, after accounting for commissions and slippage, the effective total profit has now reduced further, coming closer to around $8,000. This gives us a much more realistic picture compared to the earlier optimistic results. When we compare this with a simple buy and hold approach, we can see how the performance differs. Buy and hold is often used as a benchmark for comparison, but our strategy is signal-based and aims to capture multiple opportunities rather than holding a position continuously. Looking at other performance metrics, the Sharpe ratio is around 0.24, which indicates the risk-adjusted return of the strategy. You can also review the profit distribution and total number of trades to understand how gains and losses are spread across different trades. One key observation here is that due to the impact of commissions, several trades that were previously profitable have now turned into losing trades. This highlights an important reality: backtesting results are often more optimistic than actual live trading outcomes. In real market conditions, the results can be even more challenging due to additional factors like execution delays, liquidity issues, and higher slippage. So, this is how we should properly analyze backtesting data by including realistic costs and understanding the limitations of simulated results. Now, the next step is to move towards forward testing or live simulation. For that, we need to configure our trading system or trading bot accordingly and observe how the strategy performs in real-time conditions. Before that, let us do one more comparison. If we remove the stop loss and take profit conditions, we may observe that the profit factor improves, and the net profit increases, for example, from around $8,000 to approximately $12,000. However, this improvement can be misleading. In reality, removing stop loss and take profit increases risk significantly. Without proper risk management, a single adverse market move can result in large losses or even wipe out a significant portion of the trading account. Therefore, even though the backtest may look better without these controls, it is always safer and more practical to include stop loss and take profit mechanisms to protect the account from unfavorable market conditions. Now, if you have a sufficiently large capital in your trading account, you might consider experimenting with the strategy without applying stop loss and take profit levels. However, this approach comes with significantly higher risk. On the other hand, if your capital is limited, you need to be much more cautious. Without proper risk management, there is a strong possibility that your account could face substantial drawdowns or even be wiped out in adverse market conditions. To better understand the performance of the strategy, you can navigate to the List of Trades section in the TradingView Strategy Tester. By clicking on this option, you will be able to see a detailed breakdown of each trade, including whether it resulted in a profit or a loss. In addition to basic profit and loss information, you can also analyze advanced metrics such as maximum favorable excursion, MFE, and maximum adverse excursion, MA. These metrics provide deeper insights into trade behavior. For example, MFE shows how far the price moved in your favor during a trade before it eventually closed, while MA indicates how much the price moved against your position before settling. These insights help you understand whether your stop loss and take profit levels are appropriately set, and whether trades are being exited too early or too late. By analyzing this data, you can further refine and optimize your strategy parameters. Now, once we are satisfied with the backtesting and analysis, the next step is to move towards execution. We can create alerts in TradingView based on our strategy conditions. Whenever a signal is generated, these alerts can be triggered automatically. Using these alerts, we can proceed with paper trading to simulate real trades without risking actual capital. Furthermore, by integrating TradingView alerts with external platforms or trading bots, we can enable automated or algorithmic trading, where trades are executed automatically based on the generated signals. Now, let us go ahead and test this strategy using TradersPost. TradersPost is a subscription-based platform, meaning it offers different plans depending on your requirements and usage. I would like to clarify that I am not promoting this platform, and I am not receiving any benefit from mentioning it in this video. I am simply using it as an example to demonstrate how you can connect your strategy to an automated trading system. If you visit the platform, you can navigate to the billing section, where you will find different subscription options. One useful feature is that they typically provide a free trial period, such as a 1-week trial, which allows you to explore the platform and test its functionality before committing to a paid plan. Additionally, TradersPost supports integration with multiple exchanges, which means you can configure and connect your trading accounts based on your preferred broker or exchange. This flexibility makes it easier to automate your trading strategies across different platforms. To get started, the first step is to register on the platform. You can either create a new account manually or simply sign up using your Google, Gmail, account for a quicker process. Once you choose the Gmail option, you can log in seamlessly using your Google credentials. After logging in for the first time, you will be required to fill out some basic details and complete the initial setup. This may include setting your preferences, creating a secure password if needed, and configuring some essential parameters related to your account. Once all the required details are filled in and the setup is complete, you can log into the system and start exploring its features, including connecting your strategy and preparing it for automated or paper trading. Once you successfully log into the system, you will be automatically redirected to the main dashboard of the platform. From there, you can start navigating through the available options and begin setting up your trading environment. At this stage, you can proceed to configure your account by adding the necessary details and preferences. The platform may prompt you to enter certain information such as your trading goals, risk tolerance, and other relevant parameters. Make sure to fill in these details carefully, as they will help in aligning the platform settings with your trading approach. Once all the required information is entered, you can save the configuration and continue. After completing the initial setup in TradersPost, you can return to the main interface and move forward with creating your strategy. To do this, you need to go to the strategy section and initiate the process of adding a new strategy. While creating a strategy, you will first need to provide a suitable name for easy identification. After that, you may be required to subscribe to the strategy module depending on the platform's plan structure. The next important step is to connect the strategy to a paper trading account, which allows you to test your setup without risking real money. Now, let us go ahead and register a new strategy. We will define it in a structured and systematic way. For example, you can select the market type as crypto, since we are working with BTC/USD in this case. Then, configure the execution settings such as enabling auto submit for trades so that orders can be placed automatically when signals are triggered. Additionally, you can enable options like allowing live or paper trading based on your testing needs. By setting these parameters correctly, you ensure that the strategy operates smoothly and aligns with your intended trading workflow. Now, you can proceed to add the strategy and configure the necessary access settings. By default, you may allow requests from any IP address, which makes the setup simpler and more flexible. However, if you want to enhance security, you also have the option to restrict access by specifying particular IP addresses. This ensures that only authorized systems can send signals to your strategy. Once this configuration is done, go ahead and click on the subscribe option. After clicking subscribe, you will be presented with different connection options, such as TradersPost paper trading or other supported brokers and exchanges. You can choose the appropriate option based on your requirement and then proceed to connect it. After selecting the connection, you need to establish the link properly. Once connected, make sure to check the status of the connection. By default, it may appear as disabled, so you need to manually enable it to activate the trading functionality. Next, provide a meaningful name for the strategy so that it is easy to identify later. Then, configure the execution settings. Enable auto submit so that trades are executed automatically whenever signals are received. Select the market type as crypto, and you can either specify a particular ticker or keep it open without restrictions, depending on your preference. You can also choose notification settings, but if you do not require alerts at this stage, you can leave them disabled. Make sure to allow both sides of trading, which means enabling both buy and sell operations. Additionally, enable side swapping so that the system can switch between long and short positions seamlessly based on the signals. Regarding the trading window, you do not necessarily have to configure it immediately, but if required, you can define a specific time window to limit when trades are executed. This can be useful for controlling trading activity during specific market sessions. Finally, configure position sizing. You can choose a fixed position size for simplicity, which is usually sufficient during initial testing. Once all these settings are properly configured, your strategy setup will be ready for execution and further testing. Now, you can proceed with the order execution settings. It is generally recommended to keep the entry type as a market order, so that trades are executed immediately at the available market price. Similarly, for exits as well, you can keep them as market orders for simplicity and faster execution. However, if you prefer more control over your trade execution, you also have the option to use limit orders, stop market orders, or stop limit orders. These advanced order types allow you to define specific price levels for entry and exit, but for now, keeping everything as market orders is sufficient for testing and initial setup. Once you have configured these settings, go ahead and save the configuration. Let us try saving it now. After clicking save, if everything is correct, it should store the configuration successfully. If you encounter any issues during saving, as we are seeing here, then we need to troubleshoot the problem. Let us check what might be causing the error. One common step is to verify your email, so let us check the registered email and confirm it if required. Sometimes, platforms require email verification before allowing full access to features. Additionally, you may have the option to enable two-factor authentication, 2FA, for enhanced security. While it is a good practice to enable it, it is not mandatory for this initial setup, so you can choose to skip it for now if you prefer. Now, let us attempt to save the configuration again. If the error still appears, the platform usually highlights the specific field where the issue exists. As you can see, the problematic field is being marked clearly. In this case, the issue is related to fractional values. The system does not allow fractional quantities for this particular configuration, especially when using certain market settings. Therefore, we need to remove any fractional values and ensure that only whole numbers are used. Let us go ahead and update the configuration by removing the fractional values and selecting the appropriate option that disables fractional quantities. Once this correction is made, we should be able to save the setup successfully without any further errors. Now, let us carefully verify what the issue was, since we were not able to save the configuration earlier. To troubleshoot this, we will go back and review each setting to identify the exact problem. From the error message, it appears that the issue is related to fractional values being used in the configuration. So, the problem here is that fractional quantities are not allowed for this particular setup. Therefore, we need to make sure that all values are in whole numbers and that no fractional inputs are being used. Let us go ahead and correct this by removing the fractional option. Alright, now we have removed the fractional setting. Let us try saving the configuration again. Yes, now it has been saved successfully. This means the issue has been resolved, and our strategy configuration is now properly stored. We are also able to proceed with subscribing to the strategy without any further errors. Next, let us move forward and obtain the webhook URL. To do this, click on the webhook option, and it will generate a webhook URL for you. Simply copy this URL as it is, since we will need it for integration. Now, go back to TradingView. In TradingView, click on the alert option, and then click on the plus icon to create a new alert. From there, select your strategy, in this case, the SMA cross strategy that we have created. After selecting the strategy, you can choose the time frame. For now, we will keep it the same as the chart time frame to maintain consistency between the chart and the alert conditions. Once this is done, we can proceed further with configuring the alert using the webhook URL. Now, the next step is to configure the webhook in TradingView. First, click on the webhook option and then paste the webhook URL that we copied earlier into the required field. This URL is essential because it is the endpoint through which TradingView will send alert data to TradersPost. In addition to the webhook, you also have the option to enable email notifications. If you select the Send Email option, TradingView will send you an email whenever an alert is triggered. There is also an option to send a plain text email message. However, for our current setup, this is not necessary, so we can simply deselect these options to avoid unnecessary notifications. Once the required options are selected, click on Apply to proceed. Now, the next important step is to configure the payload. The payload is essentially the message template that contains all the required data, such as symbol, action, buy/sell, quantity, price, time, and other parameters. This data will be sent through the webhook whenever an alert is triggered. So, let us copy the payload from the strategy message template provided by TradersPost. Make sure to copy it exactly as it is, without making any changes. Then, go back to TradingView and paste this payload into the message section of the alert configuration. This section acts as the message template that will be sent along with the webhook request. Once pasted, you can also give a name to the alert, for example, SMA cross strategy, so that it is easy to identify later. Now, let us apply the settings. At this point, all the key parameters such as ticker, symbol, action, buy/sell, quantity, price, and time frame are included in the payload. So, whenever a trading signal is generated, the alert will be triggered automatically, and the corresponding trade will be executed through the connected platform. To quickly verify whether everything is working correctly, we can temporarily change the chart time frame to a very small interval, such as 1 second. This helps in generating signals more frequently, allowing us to immediately check whether alerts are being triggered and logged properly. Once an event occurs, the alert will be activated, and the trade execution process will be initiated through the webhook connection. This confirms that the entire setup from TradingView alerts to automated execution is functioning as expected. Now, let us verify whether the alerts are being triggered correctly. For that, we will wait and observe if any alerts are generated. Earlier, we changed the time frame from 5 seconds to 1 second, so we can expect alerts to occur more frequently due to the higher sensitivity. Our main objective here is to confirm whether the alerts generated in TradingView are successfully reaching the connected platform, so we need to monitor the logs carefully. Whenever an alert is triggered, it should be properly recorded, and we should be able to see it reflected in the system. At the moment, we have enabled the trend filter, which might be restricting some signals. To make testing easier and faster, let us temporarily disable or remove the trend filter. This will increase the chances of generating alerts quickly, allowing us to validate the setup without delays. So, let us go ahead and remove the filter conditions. Since our current goal is only to test whether alerts are being generated and transmitted correctly to TradersPost paper trading, simplifying the conditions will help us achieve faster results. Before proceeding, let us also clear any existing alerts to avoid confusion. Once everything is clean, we will wait and monitor if any new alerts are triggered. Right now, we are essentially observing the system to check whether alerts are being generated as expected. Looking at the chart, the price seems to be moving downward, so there is a possibility that a signal may be generated soon. We need to keep watching closely to see if an alert appears. Once an alert is triggered, we will verify it in the alert logs and also check whether it is reflected in TradersPost. That is our primary objective in this testing phase. While we wait, let us simplify the view by closing unnecessary panels and focusing on the strategy. We can also navigate to the dashboard and check if any alerts or trades have been recorded. If you look at the dashboard, you will see the paper trading account balance, for example around 100K, and currently there are no alerts triggered yet. However, the strategy is successfully subscribed to TradersPost paper trading for the crypto setup, and we have already enabled it with auto execution turned on. Now, all we need to do is continue monitoring and wait for the first alert to be generated and processed through the system. Now, as you can see, we have a paper trading account with a balance of around 100K. At this point, what we need to do is simply wait until an alert is triggered so that we can verify whether the entire setup is working correctly. Once a valid signal is generated, an alert should be created in TradingView, and that alert should then be sent through the webhook to TradersPost. After that, it should reflect as a trade execution in the paper trading account. That is the complete flow we are trying to validate here. Now, let us check whether an alert has been triggered. It seems like we expected an alert, but it has not actually appeared. So, we need to investigate why the alert is not coming even though the conditions may have been met. One possible reason is that after modifying the strategy settings, we did not properly update or reconfigure the alert. In TradingView, whenever you change the strategy or its parameters, you must ensure that the alert is also updated accordingly. Otherwise, the alert may still be linked to the old configuration. So, even though a signal might have occurred, the alert was not triggered because the correct or updated strategy was not selected in the alert settings. This is a common mistake and an important point to remember. Let us correct this now. We will go back and make sure that the correct, updated strategy is selected while creating or editing the alert. Everything else seems to be configured properly, but this missing step is likely the reason why the alert was not triggered. Now, we have selected the updated strategy and saved the changes. With this correction in place, the next valid signal should definitely generate an alert. Let us now wait and monitor again. Once the alert is triggered, we will verify whether it is received correctly and whether it is passed to TradersPost as expected. Based on that, we can confirm that the entire integration is functioning properly. Now, we are waiting for the next alert to be triggered. At the moment, the system is already in a sell state, so it is likely that the next signal we receive could be a buy action. Let us wait for that buy signal to occur, because once a buy condition is met, an alert should be generated. So, we will patiently monitor the chart and wait for a valid buy signal. As soon as the buy condition is satisfied, the alert should be triggered and sent through the webhook. Then, we can verify whether this alert is successfully reaching the connected platform. Alright, now we can see that a buy signal has been generated. Let us check whether the alert has actually been triggered. Yes, the alert has come through, and we can clearly see that it corresponds to a buy signal. The next step is to verify whether this alert has been properly transmitted to TradersPost. Let us go ahead and check the platform. As we can see, the alert has successfully reached TradersPost, and the corresponding buy trade has been executed in the paper trading account. This confirms that the entire flow is working correctly from signal generation in TradingView, to alert creation, to webhook transmission, and finally to trade execution in TradersPost. We can also review detailed logs within TradersPost to confirm that the alert was received and processed accurately. So, this is how you can set up and validate algorithmic trading using alerts and paper trading integration. It is always a good practice to test the system thoroughly in a simulated environment before moving to live trading. Now, we continued running the setup for a couple of days to observe its performance. After monitoring for 2 to 3 days, we can see that multiple trades have been executed. Some trades resulted in profits, while others triggered stop-loss conditions. This gives us a realistic view of how the strategy behaves over time under different market conditions. As you can observe, some of the trades are marked as buy and cover, where the cover typically represents the exit of a position, often due to a stop-loss being triggered. In this case, those cover trades indicate that the stop-loss conditions were hit. If you look at the overall activity, you can see that multiple trades have been executed. A few of these trades were generated directly from TradingView and successfully executed through the integration. When we review the summary, the total profit is around 3,600, which gives us a general idea of how the strategy has performed during this testing period. Now, if we analyze individual trades, we can clearly see that some trades are profitable, while others result in smaller losses. This is expected behavior in any trading strategy. Let us take a closer look at one of the trades and examine the parameters it received, such as entry price, exit price, quantity, and signal type. All of these details are captured and logged, allowing us to track the complete life cycle of each trade. The system processes these signals continuously, executes trades based on the defined logic, and maintains a record of all activities. This helps in evaluating performance and identifying areas for improvement. It is important to note that losses are not necessarily a problem here. In many cases, losses occur because the stop loss is triggered, which is actually part of a disciplined risk management approach. Since we have configured both stop loss and take profit levels, the strategy is designed to control risk while capturing gains when possible. Overall, this is how you can develop and test an algorithmic trading setup. You start by creating a Pine script strategy in TradingView, then configure it properly, integrate it with a platform like TradersPost, and finally validate it through paper trading. By observing both profitable and losing trades, you gain a realistic understanding of how the strategy performs in different market conditions. In addition to the basic setup, you can also configure detailed message formats for communication between TradingView and TradersPost. For example, you can customize and send a JSON-based message template that includes all the required parameters for executing trades. In this video, we have covered the complete process, starting from how to register on TradersPost, how to create an account, how to access and retrieve the webhook, and how to properly configure the message template. We also went through how to send signals, how trades are executed, and how positions are opened and closed based on those signals. Furthermore, we explored how to configure different aspects of the trading system and how to monitor and manage trades effectively. All these steps together provide a complete understanding of how to set up and run an automated trading workflow. If you found this useful, you can take it a step further by enhancing the strategy. For instance, you can add more filters, apply additional conditions, and perform more extensive backtesting to improve performance. It is also important to avoid trading during sideways or ranging market conditions, as strategies like SMA crossover tend to perform better in trending markets. You can focus on periods of strong momentum or high volatility to improve the probability of profitable trades. So, this is all about developing and implementing a trading strategy using TradingView, PineScript, and ChatGPT, along with integration into automated trading platforms. Thank you.